Papa G creating such a
Did I mention the groove belt is the best belt in the world? Best belt in the world.
You dream in stars, dive into the deep, fixing the world while the rest of us sleep. Your heart said I'm giving, no matter the strain.
I think we are ready.
Julie knows that fire in your soul, the kind that lifts
The broken heart.
James, you reach the skies, no one dares. In your hands, the future's card.
Who else does to know what the hell were you thinking? Your life as a yacht keeps the daylight blinking. Everything's a question, not some disguise.
With tears in the storm, you dream.
I'm going to save that for later. Good evening, and how are we doing, everybody? Sorry, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in... we got some questions over here. Alexander, good evening. Doug, good evening. All right, I could not get into the Zoom this morning because I did not receive the email. Email went out last night. Sunday night, the emails go out for Monday morning, along with the list of stocks. You should have gotten that last night, not this morning. On Sunday night, it's at night. Okay, where are we? What are we doing? What's going on? Let's see where we're doing, what we're doing. All right. Like I said, my name is James. This is Dividend Stock, brought to you by the 10-Minute Trader, where I look for simple, safe, predictable, consistent 1% every week. Yes, I know 1% doesn't sound very exciting, but here's the thing. It's simple, it's safe, it's predictable, it's consistent, and it happens every single week. Think about it. 52 weeks in the year. I'm getting 1% every single week, or more, sometimes more, every week. So what does that come to at the end of the year? Yep, we all know it's over 50% per year. And I'm perfectly okay with that. Okay, I think that's good, right? It's about good. Nope, this one twisted a little bit. Right there we go, right there. This one, got to go, nope, this way, got to go this way. This way, oh wow, okay. And that one, same thing. Right there. Whoops. All right, that works. All right, so what we're going to do is you guys, the audience, are going to give me stocks to take a look at, stuff that you're interested in, but here's the catch. There's a few caveats. Number one, make sure it's a dividend stock company, because dividend stock companies share their profits. Now, I'm 62 years old, so I'm looking for money to come in on a consistent basis. So dividend stocks share their profits with us. Okay, now we, me and you, are the investors. We buy, we sell. We are entitled to a portion of the corporation's profits. So when the corporation is profitable, they share their profits. It's that simple. So, number one, make sure it's a dividend stock company. Number two, try to make sure, is it consistently profitable? King Ken, how you doing? King Ken, how are you doing? Two different channels. All right. Michael Corey, I see you down there. All right, so let's see who's in the house tonight. Let's start over here. Who do we have tonight? Tonight. We got Rosebridge, Karmic. Okay, Karmic, how are you? Chris, George, Adriano, Jeep Boy, Kirk, Mark. Okay, Anthony Buckets. Ledger Flex, FT Bull, Roy McCrae, okay, Eric Maney, AK, Paul, Yoel, Richard Page, Past Perfection, okay, Calibri, how you doing? Ian, Go Chiefs, Carlos, how you doing, Carlos? Andrew, Jay, Dwayne, Alfia, Chiefs, Brandon, Dean, Kassar, Big Wheels, 38, MIT. You'll never know. Maybe I won't. Jersey, what's happening, Jersey? User Ryan Mathias, BP Benhari, how you doing? Thomas de Santiago, RB from Tennessee, Bengals fan. Oh, Bengals. Didn't they used to have like a football team or a basketball team or something? I don't know. Rajesh, Ramus, Michael Allen, Aiden, Mike, Dewey Fack. Okay, it's a weird name, but okay. Joker, Matt Johnson, J2A, Three Guns. Okay, J2A, Three Guns. Alvine, was that right? Did I write that right? Alvin, Taco Eater, back again. I remember that name. See me, feel me, touch me, heal me. Wasn't that Tommy from The Who? Abram, CK, Glass, Black and Blue, Golf Buddy, Rick Merling, Mama Wolf, Rick Thomas, Good Thinking, Dinesh, Wealthy Vibes, Shake, Mr. Is, and Oliver. Cool. Who do we have over here? Wow, a lot of people over here. Okay, who do we have? Gandalf. I was wondering where you were, Gandalf. Adriano, Malo, Marco, Mark. Okay, Jeep Boy. New York, South Carolina, Rob. Okay, Shogi. What's happening, Shogi? Utilico. Nice to see you again. Kirk, Moose. Shrini. Okay. Juju, Logan, Jim, M&M Fitness, Sam Guramondelli, okay, Guitar Guy, East Menard, hey, J Mama, Keith, Aaron Dunkel, okay, Damon, the Peer Paw, AJ Mama, okay, AJ Mama, once is good, thank you, Aaron Adriano, Alaya, Sunshine, Butch, Brian, Scott, Rick, Artec, Econ, Larry, Ozzy, Tom, Sergeant Zipper, Sam, Pizza Joe, Dan Daigle, Caffrey D, Golf Buddy, Ozman, Mick the Chick, Scarface, Ozzy, 303, Chris, Gail, Bobo, Mr. Hold on, just right there. Okay. Keep 'em flying. Mr. Green, Charlie, Shadow, Shackleton, Sullivan Motors, Jay, Gnome. Okay. Gene Zimmerman, Kenwood, User, Dave Huber, D Hard, Danielle, Mr. Green, JMD. Tesla covered calls this week. Good. Gin Claw. The Meat Baron, Holy Hair Permy. Okay, Brian. Chill Rez, Tommy. Tommy, can you hear me? Can you hear me? See you? Okay, Saint Martin, how you doing? Ozman. Pick me. Oh, that's disturbing. Cotton Express. You said you do VFC last night. VFC's dividends aren't consistent. Why you say rules you don't follow? Cotton Express, thank you very much. Now, Cotton Express, do I need to play it back and see exactly what I said? King Ken, how you doing? I'm doing amazing. Glad to hear that. And VFC. I didn't say that I was going to buy VFC today. I said if I was going to buy VFC. So let's take a look at VFC. 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 Here we go. Now, Let's take a look at everything on VFC, shall we? The top of the year, 22. The bottom of the year, 9.5. A year ago, we're at 16.5. We dropped to 9, shoot up to 22, brought back down to 15.5. Now we're sitting at 16. Okay, if you like VFC, why not? 1603. The 16s are going for 27. Now, 27 is still 1.5% of 16 if you like VFC. Now, if I was going to do a VFC, I'd buy at 1603 and I'd sell the 16s. Let's see what that would look like. So, the last 30 days, VFC. Here we go. 30 days ago, we were right about $20. We shoot up to 22. We drop all the way down to 15.50. Monday was 1 day to the upside. Wait a minute, Friday was 1 day to the upside, and today makes it 2 days to the upside. Now, for me, if I was going to jump into VFC, number one, I'd wait one more day because I like 2 days to the upside. Here's day number one, Friday. Day number two, today. Higher high, higher low, bouncing off the bottom. Okay, so the 16. Let's see what it looks like. Let's get rid of this. Let's do a covered call. We will look at the 16 right there. Now, the 16. Let's do just one contract. Here's what it should look like. Here's what it should sound like. By one covered call, VFC. 20 March 26th. That means it's this coming Friday. The $16 call option. Okay, the profit is going to be 37 bucks. The investment, 1,500. So what kind of rate of return is that? Well, let's get the calculator out here. If the profit's 37 bucks, the investment 1,583, that would give me a total of 2.3%. Now, Cotton, I don't know about you, but 2.3% for 1 week, okay. But then you got to ask yourself, do you like VFC? Is it a company that you can get behind? Well, you either like it or you don't. Let's save it because 2.3 is not that bad. I'm not saying buying it. I'm not saying that I'm going to buy it. I'm just saying. VFC, we seen the numbers. We saw the chart. We looked at things and it looked okay. You have to decide, does it make sense for you? Sarah Roberts, let's talk cash. Okay, Sarah Roberts, exactly what is it about cash you want to talk about? The floor is yours. Go ahead. What do you got? Sarah, you said let's talk cash. Come on, I'm waiting to hear from you. Come on, it's all you. What do you got? Come on, tell me something good. Tell me that you like it, yeah. Here we go. Oh, there it is. There we go. VFC 20 March 26. Greg D, Sarah Roberts, what options are you looking at? Okay, Sarah, I thought you wanted to talk about cash. What option am I looking at? I'm looking at the $16 call option against VFC for, what was it, 2.3? 2.3% for 1 week. 2.3% for 1 week. Okay? $2.3, and today is Tuesday. Okay. What options are you looking at? Sarah, that's still not talking about cash. You said let's talk about cash. Come on. What do you got? Okay. Let's find something else. Sarah seems to be seems to have lost her voice, or fingertips aren't working. Or maybe she's busy doing something. I have no idea. All right, so what do you guys want to take a look at? It's an expression. Let's talk business. There's a huge difference between business and cash. Hey, Dad, how you doing today? Hey, sir. Do you mainly look for the yield when researching a stock? No. Basically, Dad, what I'm looking for specifically are companies that are consistently profitable. Okay? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. Now, the companies that are consistently profitable, well, are they in the right time to buy them or not? Because when a stock is dropping, I don't want to buy it. Okay, I want to buy it once she hits the bottom, turns around, goes back up again. As long as the company's consistently profitable and has weekly options. That's basically it. Consistently profitable, weekly options. Okay? Sellbone77, do you ever sell puts to acquire stock or just buy them outright? You know, that's called the wheel strategy, where you sell a secured put first, then buy the stock, then turn around and get a covered call on it. It's called the wheel strategy. There's nothing wrong with it. Okay, but here I'm only giving away one strategy. The wheel strategy is 2 in 1. Okay, it's selling a cash secured put and then selling a covered call. That's 2 strategies. I'm showing you one, a covered call. Simple, easy, safe, predictable. All right, Sarah, what else you got for me? Ernie wants to take a look at Apple. Let's take a look at Apple. Apple. Here we go, here we go, here we go, go, go. All right. So, Apple. Here's the high of the year. Here's the low of the year. Here's where we were a year ago. Here's where we are now. Look at the motion. Down, up, down, up, down. What's going on right there? Is it time to buy? Is it time to stop and take a look? I don't know. Is it? Do you like Apple? Well, let's take a look at the last 90 days. The last 90 days is the last 3 months. VFC dividends are inconsistent, but you put them on your board. It's a question mark. Absolutely. I put Tesla on my board too. I put Apple on my board. I put IBM on my board. I put Riot. I put whatever. See, Cotton, I'm putting up whatever somebody wants to take a look at. That doesn't mean I'm going to buy it. Okay? If you asked me to take a look at Teresa's tree houses, I'd pull it out and look at it. Doesn't mean I'm going to buy it. Okay? Now, I don't make recommendations. I make observations. Ernie, we're going to take a look at Apple. Okay? So, 252.82. Okay, we're currently right here, dropping, dropping, dropping. Now, we found the bottom Friday. Well, it could be the bottom. Not 100% sure. Down, up, down. Here's the bottom Friday. So today could be one day to the upside. It could be, if you like Apple. So, Cotton, I'm going to put Apple up on the board too. So let's take a look at it. If you like Apple. Now, Apple's one of those companies that just doesn't seem to be going anywhere. Not that the fact that, not going anywhere, up, down, but that thing. All right. 250, 250. There it is right there. Simple, easy. And here we go. Buy one covered call, Apple. 20 March 26th. That means it's going to expire this coming Friday. The 250, 250 call option. Well, look where the stock is at the moment. 252.82. So if I buy it tomorrow morning, I would be paying roughly 252.82. And if I sold it for 252.50, I'd collect $360. Yeah, it's a $25,000 investment. Well, let's see what those numbers look like. Does it even make sense? Okay, profit $360. for one contract. We're going to divide that by the investment because anyway, Riverboater, how you doing? Tempramed, you got to give me the ticker symbol, okay? Because that's not going to do me any good. I mean there's over 10,000 different companies. I have no idea what Tempramed is. Hold tight. We're going to take a look at that. Oh, okay. Divided by the investment, which is 24,890, and that comes to a total of 1.4%. If you like Apple. Okay, let's pull it up. 1.4% for Apple. Now, I'm only looking for 1% because 1% is over 50% by the end of the year. It either makes sense, you like the company, or you don't like the company. I mean, we check every week. This week there's 10,900 and however many. All right, first one we found. Here's the second one right here. Apple. One covered call, Apple. 20 March, which is this coming Friday. The 250 call option. 360 the profit, 2,500 is the investment. For, what was that, 1.4? Yeah, 1.4%. If you're okay with 1.4. 1.4 a week is still over 50% per year. If you're okay with that. Jin Kla, is that right? Jin Clay wants to take a look at Lunar. Okay, Lunar it is, coming right up. What was your first one tonight? VFC. Apple. All right, let's get rid of this. 1.4. Well, hate it when it does that. Can't always trust technology. Let's get rid of this. Let's go back to here. What do we have next? As we're waiting comfortably. Waiting. Hey, Kagdala. Ernie J, what if the stock rallies? What if it does? Hold on. We're going to get to that question in a second. Okay. Jin Clay wants to take a look at Lunar. All right. $1.4. Okay. Okay, Jen Clay wants to take a look at Lunar. L-U-N-R. L-U-N-R. Interesting. Intuitive Machine Incorporated. Okay. High, low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up. Okay, what's going on there? Let's zoom in a little bit tighter, see if we can see something. There we go. This is going nowhere. Up, down, up, down, up, down. Kind of like nowhere. Okay. The 18s are going for 105. Holy cow. Does this thing even have dividends with premiums like that? It is heading to the upside like that. If you like this, which I have no idea who these people are. Well, let's go find out. Okay. L-U-N-R. Okay, so we're going to Yahoo Finance to see how the dividends look for this thing. For that, we look under historical prices right here. Come on. Okay, now, historical prices. I want to see just the dividends only. Now, I want to see all the dividends. However, this company has no dividends. Sorry. Okay, Boris Buckley wants to take a look at Interesting. What do we have down here? Okay, Mike Corey, how you doing? Cheesy Sasquatch. Thank you for that. All righty, all righty. 27.5 of 16 is still like 16. Okay. Hello, I like your camera settings. It might be mirrored. Yep, thank you. Are you buying shares or buying the option? I'm buying the shares and selling the options. It's called a covered call. It's a very safe, very predictable trading strategy if you're okay with 1% a week. Now, I'm okay with 1% a week. I'm not sure about you, but ask yourself that question. All right, what else do we got? Oh, so Microsoft. High, low, was, is, up, down, up, down. What's going on there? It's at $3.99. What do you think? Up, down, up, down. Now she's going back up again. The 400s are going for 480. Little over 1% if you like it. All right, well, let's take a look at Microsoft. The 400 right there. Let's do one contract, 400 at Microsoft. Why the hell not? Okay, one covered call. Microsoft, 20 March. That's this coming Friday. The 400 call option. We're at $399.95. How much closer to 400 did you want to get? All right. So my profit 606. The investment is 40,000. Let's see. Let's get that calculator out. We're going to need that. Okay, so 606 divided by 39,394 gives a grand total of, try it one more time, 39,394, 1.5% from Microsoft. Okay, hold on a second. There we go. Microsoft. 20 March, 400 call, 606, 39,000, 1.5%. 1.5% for 1 week. Think about it. 1 week, 1.5%. The end of the year, that's got to be over 70%. By the end of the year, if you can get 1.4% or 1.5% every single week. Okay. $1.5. That's 3. We got 2 more to go. Let's do this. Sim. I've never heard of Sim before. Sim. What is Sim? CIM. CIM. Chimera Invert Corp Equity. No. Sorry. I don't do monthlies. They just don't work for me. The numbers just don't work for me. What's a good delta? How do I pick a strike price? Okay? You're looking for something else. Because if you're asking me about the delta, more than likely you're buying options and you're not selling. Okay? And there's nothing wrong with buying options. I'm an option seller. I'm not an option buyer. Okay? Most options expire worthless. I want nothing to do with buying options. I only sell them. Jin Clay, I love aerospace stocks. Okay. Enza, how you doing? Thoughts on SoFi Technologies? Okay. SoFi. There you go. That's SoFi. Only problem I have with SoFi is they have no dividends. So without the dividends, how are we supposed to know when are they going to move? Now think about it this way. All right, let's get rid of this. Let's go to here. Here is a calendar. Let's get rid, not that one. Let's look right there. Okay. This here is an EX dividend calendar. It's just like your basic everyday calendar, Monday through Friday or Sunday through Saturday, who knows? Whatever you pick. So the thing is, all these little green dots represents companies that have increased their dividends to their shareholders for at least 25 consecutive years. That's 25, that's a quarter of a century, year after year after year of increased profits. Okay, you cannot increase the dividend without increasing the profits. They go hand in hand. Okay, if the dividend goes up, so do the profits. If the profits go down, so do the dividends. They go hand in hand. So if you just look at the dividends, because they're easy and quick to look at, it's just one number. It's either going higher or it's going lower. So if it's going higher, well, that's telling me the company is more profitable than they were previously. That's why I'm looking for 2 decades of increased profits. It's quick and easy to find. You're just looking at a sliding scale. All right, this is keep going up and up and up. Can't always trust technology or James. Thank you, Cotton. I appreciate it. Thoughts on SoFi? We just did that one. Okay. JBL. Zaid. We'll take a look at JBL in a minute. Hold on. So the EX dividend calendar tells me when a stock is getting ready to pay its dividend. So why do I think that's important? Well, for me, yes, Nurse Gigi, that was Microsoft. Thank you, Jin Clay. Please look at SoFi. We already looked at SoFi. We already looked at Microsoft. Mara is coming up next, later. Okay, sit tight. Okay. Okay, looks like Cotton, do you really want to get on my bad side? I mean, really, come on. I mean, you've been here, you ask questions, I interact with you on a consistent basis. I don't know what you're expecting from me. All right, so where I looked at that, I'm trying to learn and have picked SMG. Ooh, SMG. Okay, sit tight for a second. All right. I'm talking about the EX dividend calendar and why I'm looking at dividend stocks specifically. Because a dividend stock has a tendency to be predictable, meaning it does the same thing over and over and over again. Okay, because there's 4 quarters, January, February, March, April, May, June, July, August, September, October, November, December. Now, each quarter has 13 weeks, week 1 through week 13. Every single week. You ready? Let's see this. You ready? This is March. Let's go back to January, just for the fun of it. Okay? Here's January. Week 1, week 2, 3, 4, 5. February. 6, 7, 8, 9. Now let's look at March. 10, 11, 12, 13. 13 weeks every single quarter. Okay, so week 1 in the first quarter looks the same as week 1 in the second quarter as does week 1 of the third quarter and the fourth quarter. They're all the same. It's repeatable every 13 weeks. So when you see me jumping in and buying a stock such as Medtronics, Walmart, Nordson's, Albemarle, Pepsi, Lennar, Stanley Black & Decker, McDonald's, T. Rowe Price, Cincinnati Financial, Cardinal Health, so on and so forth, they consistently increase their profits. And every 90 days, they pay a dividend. And here's the thing. Just before the dividend, the stock has a tendency to increase in price. So knowing that, increasing in price just before the dividend allows me to jump in, grab a quick 1% profit, jump out, go on my merry way, and wait for the next one to come up. Because it comes up every 90 days. All right. Let's get back to where we're looking at. You like Coinbase. Lovely. Hold on, I got some questions over here. Okay, so I don't pay attention to the delta. I really don't, because I sell options. I'm not a buyer. Okay. What are options? Oh boy, Alex, an option. It's like when you open up your closet door, you look in and say, all right, do I want the red shirt or the blue shirt? Maybe the green shirt. Those are options. You have different choices. An option is basically a choice. So when it comes to stock, a stock option is a choice. If I sell you an option, you have a choice to buy it at a certain price at a certain date. If I sell an option, you, the buyer of the option, has the right to buy at a certain price by a certain date. Now, me, if I sell the option, I can't sell it to someone else. I can only sell one option per one contract. That's about it. So you have choices. You're not obligated to do anything, but you do have choices. Those are call options. A put option has an obligation. So if I sell a put option, I'm selling somebody the right to force me to buy their stock at a certain price by a certain date. Thank you, Latilco. What do we have here? All right. We did Microsoft. Niculator, we're going to do Mara right now. Mara. M-A-R-A. Okay. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Down, up, down, up. Okay. We bottomed down at 7. Now we're at 10. That's a nice little jump. Let's take a look. The last 90 days, or the last 3 months. The top, the bottom, where was it? Where is it? It's up, down, up. Easy to see there. Bottom, now she's going up. Okay. If we zoom in a little tighter, now we got a little bit of a problem. Because here's the bottom at 7.3. Now we jumped up to 10. Now it looks like she's coming back down again. So maybe not Mara. Not this week anyway. The bottom's here. Shot up, pulled back, shot up again. Now she's going to come back down again at this moment. So Mara maybe in 2 weeks. So let's write Mara down 2 weeks from today. Oh, there's nothing on that page. Mara. All right, Mara, 2 weeks from today. Gotta love it. Get this out of my way. All right, let's get back to what we're doing. Please try SoFi Technology. We looked at SoFi Technology 2-3 minutes ago. Okay? It doesn't have any dividends, so no. And besides that, SoFi is actually dropping. Okay? So if you really like SoFi, hold tight and you'll have bottom show up, turn around, go back up again. Just keep your eye on it. Venom Chassis. I'm trying to learn and have picked SMG. I have no idea what SMG is. It's a no is what it is. Okay. Here's your top. Here's your bottom. She dropped, shot up. Dropped, shot up. Dropped again. Now she's turning around, going up. Let me zoom into that and give you a quick little show. Okay. Here's the top. Here's the bottom. 1 day, 2 day. 2 days to the upside right there. Okay. 30-day top. 30-day bottom. Now she's going back up. It's an observation. What you do with that information is your prerogative. But March, April, June, July, September, that is what's called a monthly optionable stock, which means one option per month. That's it. I like one option every week because it gives me more choices and more money. DNC United, Soundhound. Isn't that S-O-U-N? Okay, Soundhound. Here you go. DNC United, you ready? Here's your top. Here's your bottom. Here's where it was. Here's where it is. Up, down, up, down. What's going on right here? Last 30 days. Does it make sense? Well, that didn't work. 30-day bottom, shot up, dropped. Looks like she's turning right there. That's what it looks like. If you like SoundHound. DNC. Look, here's your 30-day top. She drops. Now she's bouncing, going up. But you need to ask yourself a question. Is this a company where I want to put my money? Well, for me, not really, because look at these numbers here. Right? At 7.5, well, yeah, I'm making a decent return. The 8's not that bad. But once you go 2 strikes out of the money, that's 4 cents. Then drops to 2, then drops to 1. That's not really. But ask yourself the question, do you like the company? So I got 5 simple rules. Rule number 1 is never buy anything you don't understand or you do not want to hold on to long term. You either like it or you don't. Put your money in it or don't. The choice is always yours. You get to choose wherever you want to put the money, and you've got to decide, is that a good place for your money, yes or no? Okay, thank you, Cotton. Utilco, excellent strategy, thank you. What website is that? What is that? RSKO4. This is not a website. This is a trading platform. That's where you go to buy and sell stocks. This one is owned by Charles Schwab. It's called Think or Swim. James Ford, Zim. Z-I-M. Zimziminy, no for you. I don't like it, and this is what I do. Okay, so up, down, look at this big, huge gap. We go from 21 to 30 in one day. That's called a gap up. Now it's dropping. Well, if you really like Zim, wait for it to stop dropping before you jump back in again. Jomo. SoundHound. We do that yet? Yes, we just did. Enza. Thank you. You're welcome, Enza. All I want to know, James, is if dividends aren't increasing, would you fool with that company? No. There's your answer. Frosty SoFi Toby, thank you. James Ford, can you look at Zim? Interesting hearing your thoughts. All right, that is Zim. We just did it. Okay, what do we have over here? Okay, what are options? We already did that one. Chill Res. Alex, can you do United Oasis Reserve? Alex, can you give me the ticker symbol? Because remember I said rule number 1, never buy something you don't know or you don't understand. So if you know it and you understand it, you should have at the top of your head the ticker symbol. I don't know it because I don't do it. What's the difference between buying and selling options? Well, if I buy an option, I have to pay money. If I sell an option, I get to collect money. That's the simplest form there is. Okay, Alex? If I'm buying an option, I'm paying money. Okay? If I'm selling an option, I'm receiving money. Plain and simple. Romeo Altria. Didn't we look at Altria last night? I think we did. Look at what happened with Altria. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up. Okay, what's going on there? Because there is the last couple of weeks. Actually, the last 30 days. Here we go. Last 30 days. Up, down, up. Okay. Do you like it? It's a good question. Passport Eric, does every stock on your EX dividend calendar have weeklies? Does every green dot have a weekly? No, not that list. Okay, that list was, hold on, let's pull that one up again. Okay, this list here, who asked that one? Passport Eric. This list here has all the companies have 25 years of increased dividends. Says nothing at all about the options, just the dividends. Are the dividends increasing? Yep, every single stock on this list has an increased dividend for the last 25 years. Whether or not they have weeklies, Well, let's find out. Sherwin-Williams, weeklies. I think that's monthly, weekly. Weekly, monthly, weekly, monthly, monthly, BDX weekly, monthly. T. Rowe Price. That's a weekly. We did that one before. This one I don't know. Nordson's monthly, weekly. APD, I'm not sure. Oh, it's monthly. Yeah, so most of them have weeklies. Some of them have monthlies. Thank you, Oscar's House. User 6879037428793. Why couldn't your parents name you Ted? I'm going to call you Ted. How's that? Pfizer, PFE. Pfizer. Top, bottom, where was it? Where is it? Down, up, down. Not this week, sorry. What else do we have over here? Rah, I'm selling covered calls, not buying them. I just don't want them called away. Why ask Delta? Okay. You're selling covered calls and you don't want them called away. Well, the Delta doesn't really tell you whether or not they're going to be called away. The Delta just gives you an idea of the rate the option increases directly related to the stock price. Let me give you a for instance. Okay, we're at Pfizer at the moment. Okay, we're at Pfizer. Okay, the current price, $26.61. The $26.50 is the closest strike price to the current price. Okay? It has a delta of 55. Basically, what that means, 55. If the stock goes up, $1, the option price, or the 55 delta, okay? If the stock price goes up $1, the option price will go up 55 cents. Okay? Now, if it was an 88 delta, the stock will go up $1, the delta would go up 88 cents in relation to the stock. But don't let it get called away from you. I don't have it handy. Because the Black-Scholes pricing method of stock options changes every 10 or 15 seconds. Because as the stock moves, the clock also ticks away. So as the clock is ticking away, the time value or the theta decay, theta right here, okay, the option price will decrease because of the theta decay. And the closer you get to date of expiration, the theta decay increases rapidly. So just because the delta says 55, and 4 days out, if the stock goes up $1, the option is going to go up $1. Well, the option at the moment is 43. So if the stock goes up $1, okay, well, $1 on a $26 stock is 5%. So if the stock goes up $1, the stock $1 on a $26 stock is probably right around 1%. 1%. It's 55 delta. Okay, if the stock goes up $1, the 26.50 option is at 43. It will go up 55 cents, which will more than double. So by the stock moving $1 with a 55 delta, that means the stock went up 1%, but the option price went up over 100%. That's why people buy options, because of the leverage. But that's just the price. Well, it has nothing to do with the theta decay, because as the day progresses, the theta decay will increase to a point where it's just not worth it anymore. So I just don't do them that way. Okay, I bought many options in my past life. I call it my past life when I was working, because if I made a mistake when I was working, I could always put in a couple extra hours to make up for it. But retired, if I lose money, I'm SOL. Okay, it means I have to go back to work, and I have no desire to do that. If the stock moves 1% per day, can't I get at least 5% average per week on the stock options? Yeah, but the time that you're going to spend in front of your computer trying to figure that one out, you have fun with that one. Diana, you didn't talk about SoFi, you talked about dividends. I did talk about SoFi. I said SoFi doesn't have dividends, so there I don't do SoFi. I'm not quite sure what you wanted to hear about it. SOFI, SoFi. So let's take a gander at SoFi. Here it is. Whoops. Let me get rid of that stuff. Let's change this to that. All right, Diana, you ready? SoFi, here's the top, here's the bottom. Here's where it was, here's where it is. Down, up, down, up, down. Okay, let's zoom into that. Okay? Down. That's what I showed you 15 minutes ago. Okay? SoFi, 30 days ago was at 26. Now we're at 17, and it's still dropping. What else did you want me to say about SoFi? Thanks for the Delta lesson. You're welcome. Does every stock on your EX dividend calendar have weeklies? No. On mine, yes. That one's not mine. Okay? Okay. See, when I look at dividend stock, when I look at the calendar, okay, right here where it says personal. Now, I got 7 accounts, okay? 7. My list is on account number 1. This here, I believe, is on account number 2 or 3. But my account number 1 I've had for 25 years, I think. So I have a lot of stocks saved in stock list number 1. This ain't it. But right there under personal. You're welcome for that Delta lesson. Okay, that's done. So Mr. Nice Guy, yeah, you could do that. But you'd be spending a lot of time sitting in front of your computer. Diana, thank you for that. Sam, Ron, Intel has blessed me for the past 4 weeks, rolled over and over again. Me too. Now, I did get rid of Intel in one of my accounts because it just jumped up so much, it just didn't make any sense to hold it any longer. Okay, Lavmork, you like Coinbase. Good for you. I don't do Coinbase because it doesn't have any dividends. I wish Alphabet would increase their dividend. Give it time. Alphabet has only been paying dividends for what, 2 years? Sellers use deltas. No, I'm terribly sorry. I've been selling options for quite a while, and never once have I ever looked at the delta, because the delta has nothing to do with what I'm looking at, Diana. Okay, what I'm looking for is a percentage of return on my investment. Do I really care what the delta is? No, I don't, because it's got nothing to do with what I'm doing. Levermac, I sell options for a living and use delta. I never sell over a 0.05 delta. Okay, good for you. Now, like I said before, the trade, wait a minute, actually, I didn't even tell you guys this. Hold on, hold the phone for a second. I got to show you something, as much as you may or may not want to see it. Here it comes anyway. Okay, here's my website, The 10-Minute Trader. Now, it's called The 10-Minute Trader for a specific reason, and I'm about to tell you why it's called The 10-Minute Trader. Okay? So, long time ago, 2008, as a matter of fact, I had a 9-year-old daughter. She's not 9 anymore. She's going to be 26 this year. Here she is.
Hi, I'm Gracie, and as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
That's me. 16 years ago.
21 days in a month. What does that mean? That means every single day you
My favorite part's coming up. Watch this. Hold on.
paying out dividends. Seriously.
Okay, so the reason I show you this, 16 years ago, 2008, was that 16? Wait a second, we're in 2026, 18, holy shit, 18 years ago. All right, so 18 years ago, my 9-year-old daughter says to me, Daddy, what are you doing? Can you teach me? So my 9-year-old daughter wants to learn how to trade stocks. Okay, great. And you guys know how to teach a 9-year-old? All right, so here it is. The criteria that I had to come up with had to be simple. She's only 9. Safe. She's only 9. Simple, safe, predictable, consistent, and no way for her to lose. That's the criteria. Simple, safe, predictable, consistent, and no way for her to lose. So I had to come up with some rules specifically for my 9-year-old daughter. Rule number 1. If it's not on the list, don't buy it. Now, for you guys, I say if you don't like it and you don't want to own it, don't buy it. But for my 9-year-old daughter, if it's not on the list, don't buy it. Plain and simple. The only thing on the list was the dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on Warren Buffett's list. Rule number 2, never, ever, 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 ever sell for a loss. Rule number 3, make sure the company is consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure all the numbers work. So, 5 criteria, 5 rules for a 9-year-old. No, I did not try to explain to a 9-year-old what the delta was. I didn't try to explain to her the Greeks. I didn't try to explain to her the Fibonacci. I didn't try to explain to her the moving averages. I didn't explain to her anything but, is it a good company? Is it in the right motion? It's a simple 10-minute strategy created for a 9-year-old. Some of you here get it really quick, really easy. Some of you want to complicate it. Complicate it all you want. You're not going to change my mind. If you go to YouTube and check, I get 1,800 videos. And no, none of them are, I shouldn't say none of them, but 95% of them are me standing in front of the camera, not AI. Now, a couple of weeks ago, my son has joined my little crusade here. And yeah, he takes some of the videos, these long ones, and he cuts them all up in little pieces and blasts them on there. Fine, wonderful. But you're not going to change my mind. Simple, safe, predictable, consistent, no way to lose if you do it right. Never buy something not on the list. Never sell at a loss. Make sure the company's profitable, weekly options only, and make sure the numbers work. I really don't care about the delta. It does not serve any purpose whatsoever in what I'm looking for. What am I looking for specifically? We don't need that anymore. Don't need that anymore. Okay. What I'm looking for specifically. Okay. The current price, $17.63. Today's Monday. Tomorrow's Tuesday. Great. If I buy it tomorrow morning, $17.63. Is it bouncing up or is it going down? Well, this one's going down, so this is going to be a no. But let's say, hypothetically speaking, it was a yes. So, if I'm buying it for $17.63, the closest strike price is going to be $17.50. Okay? So, if I buy at $17.63, sell it for $17.50, I'm losing 13 cents right off the top. You take this, there, take the 13 cents off of that, 69 minus 13 is 56 cents. 56 cents on a $17 stock is over 3%. It's got nothing to do with the delta whatsoever. Absolutely nothing to do with the delta whatsoever. 1763, I sell it for 1750, which is less than what I paid for it. Stocks go three directions: up, down, sideways. Great. It goes up, great. I make my 1.5%. If it goes sideways, great. I make my 1.5%. If it goes down, well, it can go down all the way to 1750, and I'd still make my 1.5%, whatever the percentage is. And I get to keep the stock and do it again. It's a weekly option. I can do it every single day, every single week, and pick up 1% every single week. I really don't care about the delta. I don't. I don't care about the moving averages. I don't care that I don't care what is it a good company? Are they consistently profitable? It's a yes or a no. And it's not my list. I got nothing to do with the Dividend Kings list. There's somebody out there somewhere who takes a look at every single company and say, hey, well, this company's increased its profits every single year. Well, let's make a list. There's 10, hold on. Let's do it for the fun of it. Let's go take a look at FinViz, FINVIZ. There it is right there, the stock screener. Hold on. The screener right there, and here's the number. Right here, it pops up. 10,000. 10,968 different companies. 10,968 different companies. Do you think I really care? No, I don't. I only care about those that are consistently profitable. And what are they? The Dividend Kings. 5 decades. That's 10, 20, 30, 40, 50 years or more of increased profits. That's it. Dividend Aristocrats. 25 years. 10, 25 years of increased profits. Dividend Champions. 25 years increased profits. Dividend Contenders. 10 to 24 years of increased profits. And then we all know who Warren Buffett is. If it's good enough for Warren, good enough for me. There it is. That's the way I pick my stocks. The company's either profitable or it's not. I don't care about the delta. It's got nothing to do with what I'm looking at. Simple. 1063. Let's get rid of these. 1063 is the current price. If I sell at 1050, I'm getting 69 cents. I lose 13 right away. Now I'm walking away with 56. 56 cents on a $17 stock is over 3%. Whether the stock goes up, down, sideways, don't care. I want my 3%. But is it a company that I like? Do I like this company? Do I want to own it? Remember rule number 1? Never buy something you do not want to own long term. If you don't understand it and you don't want to own it, don't buy it. It is such a silly thing to say. Yet I find myself having to tell perfectly normal adults, if you don't understand the stock, if you don't know what they do, if you don't know anything about them, you shouldn't be buying them. It's actually that simple. If you don't understand the company, don't buy it. If it doesn't make sense, don't do it. It's your money, you get no one to answer to but you. I don't make recommendations, I make observations. It's 1763, 1750, 69, that's more than 2%. A child could tell you that. You call me a child if you want, I act like one. That's what everyone tells me. So either it makes sense or it doesn't. It's a simple game. 1, 2, 3, A, B, C. Is it a good company? Is it profitable? Does it have weekly options? What does the chart tell me? It's going down, up, down. It's a no. It's going down. No, thank you. AT&T. Wait a minute. Let's take a quick look. AT&T. Okay. Up, down, up, down, up. Ooh, let's zoom into that. Okay. Up, down, up, down, up. Well, there you go. 1, 2, 3. Right there. AT&T. What's the numbers? 27.73. Great. For 27.50, 46. I'm losing 23 right there. Take 23 off that. Yep, I'm still making my 1%. It's AT&T, over 100 years old, and it's offering me 1%. I don't even have to take a look at it. Okay, here's the 30-day high, the 30-day low. Now she's going up. It's elementary. It was created for a 9-year-old. Why are you adults? Now, why do I say you adults? Because I have settings on each one of these cameras saying nobody under the age of 18 is allowed to show up. It's not made for adults. mean, it's not, it is made for adults, it's not made for children. So if you have a problem with something I'm doing, that's not my fault. That's a you thing. I'm showing you what I do. I'm not telling you to do it. Okay, you're here on your time to see what I'm doing. You don't need to question me what I'm doing. You can ask, why are you doing it? Or can you explain a little bit more in depth? But don't insult my intelligence by asking me stupid things, especially when I say I don't do it. If I say I'm not interested and it's a no, well, that's what it is for me. If you like it, great. Good for you. That's good. Ugh. I'm not used to talking so much. All right. So, Val Mork, you sell options for a living. Good for you. Thank you for the roses. Very nice of you. Thank you, Cotton Express. Calibri, Intel. I love Intel, INTC. I sold my Intel recently because it went up. Okay, see? So I let it go. There's always going to come a point where it doesn't make sense to hold on to it anymore. And we can take a look at the chart. Here's the top, the bottom. Where was it? Where is it? That's it. It takes 2 to 4 seconds. High, low, was, is. That's it. What do the numbers look like? 45.76. The closest one's going to be 45.50. Paying 166. Hell yeah, that's over 3%. It's simple arithmetic. 45.76. 1% of 45.76 is 45. 1% of $45 is 45 cents. So if the 45 is paying 166, that's more than 345s. That's more than 3%. And it's Intel. I like Intel. But here's the thing. That's the 1 year chart. Okay, it gives me the high, it gives me the low, and it gives me the motion. Great, but it doesn't tell me what it's going to do next. I mean, it gives me an idea there, but not really. That's why I got to zoom in. I look at the 90-day, which is the last 3 months. The high, the low, was, is. Same thing, look, going up there. Nice. But now, the 90-day chart gives me an idea of momentum and patterns. This one doesn't really have a pattern. Down, up, down, up, down, up, down, up, down, up. What's going there? Okay, so zoom into the last 30 days, gives me a better idea. Okay, this is the last 30 days. The high, the low, where was it, where is it? Down, up, down. No, thank you. I don't buy at the high. Okay, I don't buy at the high. It just doesn't make sense. You've heard it over and over and over and over and over and over again. You want to make money in the stock market? You buy low, you sell high. Not the other way around. Social Lily, we appreciate all you're doing. Thank you, enlighten us. Thank you. Thank you, Social. Intel, we just looked at that one. SLV, Ra, SLV, what is that? Isn't that silver? SLV? iShares Silver Trust. Yeah, no thank you. With all the turmoil going on in the country, in the world, no. Ra, can you show me the 7 stocks to consider for 2026? I have cash, not sure what's good. Okay, so Ra, I don't give recommendations. You give me a stock, I'll plug it in, and I'll give you my opinion based on my strategy for me. But you got to remember where I'm coming from. I'm 62 years old. I'm retired. I don't punch a time clock anymore. Okay, I'm getting my first Social Security check this month. I never got one before. This would be my first month of collecting Social Security. I actually started. Yay for me. Not the point. The point is, I don't give recommendations. I told you the list to look at. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. If you don't want to do that, go to the website. It's there. Patreon. You can go right to my Patreon page. The list is right there on the front page. What do we got? Sam, you like that? Way to go, Sam. I appreciate it, Sam. Thank you. Simone, what's happening? How you doing, Simone? Glad you're here. Okay, what do we have down here? Okay, so we answered all those questions. Let's jump down here and see what we got with you guys on YouTube. Hopefully it's a little better. John Ward, I love Clorox. I really do. A Dividend King, wonderful company. But it only has monthly options. Now, we do have another strategy specifically for companies with monthly options and people who have less money. Clorox is not on this list. It's on a different list. What's the tea? The tea is, it's an herbal tea for sore throats. And it has honey, ginger, and cinnamon to help with the sore throats and an upset tummy. Yeah. So I'm not used to talking so much because where I worked, I was a CEO of a manufacturing company, so I didn't do a lot of talking. But nowadays, I do about 3 hours a night and about 3 hours during the day of straight talking because nobody's talking to me. I'm just reading stuff. Okay, I'm not having a conversation. I'm talking at people, not with people or to people. So talking all the time really gets to your throat after a while. All right. Thank you, Anaki. I can't even read that. That's a long name. All right. Holy cow. I can't possibly be all done. Forever Young. Wow. You were young. Forever Young. Yep. Do you buy covered calls in the money? I don't buy call options. Simple like that. Clorox. You got that one too. BMY. Bristol Myers Squibb. I like BMY. BMY. That is another Dividend King. But look at the numbers. Okay, the top, bottom, where is it? Down, up, down, up. Look at that, turning right there. Now, Bristol Myers Squibb, if you know anything, they are, I think they're over 100 years old, and they are a Dividend King, which means they've increased their dividends higher and higher and higher and higher. Why not? Kimberly Clark. Ooh, Amanda, nice one. But here, take a look. Here's the bottom, 53, shoots up to 63, drops to 58, now she's going back up. Awesome, I like that. Up, down, up. That's perfect. 59.71. The 60s are going for 61, just at 1% if you like Bristol Myers Squibb. So let's take a look. Let's get rid of this. Let's do one at 60 because it's safe, and I like Dividend Kings. They're like almost no-brainers if you think about it. A company that's been around for 100 years, and it has over 5 decades of consistent profits. Why wouldn't it be on your list? Now, I understand you're not all looking for the same thing that I'm looking for. Consistency, profitability, safety. You might not be looking for that. But I am, and some of you out there are also. So here it is. Bristol Myers Squibb, 20 March, which is this Friday, the $60 call option. The profit is $94. It's not $5,900 investment. Well, I know that's more than 1%. I'm going to save it anyway. I like Bristol Myers Squibb. So let's get the calculator out and see what the calculator says. So the calculator, $94 is the profit. You take the profit and you divide it by the investment. And this one, the investment is $5,906. That comes to a grand total of 1.6%. If you like Bristol Myers Squibb. There you go. BMY. 20 March. 60 call option. $94 is the profit. $5,900 is the investment for 1.6% for 1 week. If you like Bristol Myers, and only if you like Bristol Myers Squibb. And I'm terribly sorry, it's not going to go through the roof and make you rich overnight. And if that's what you're looking for, you're in the wrong place. I don't do that. I'm retired. I'm an old man. I like things slow and predictable. 1.6. Whoops. That didn't work out the way I wanted, did it? Let's try this one more time. Where is it? Come on. There it is. $1.6. Gotta love it. Next. Ooh, Amanda, Kimberly Clark. You can't go wrong with Kimberly Clark. Again, another dividend king. KMB. Whoops. I didn't want to save that. I wanted to toss it. Damn it. Oh, whoo. That just rattled my bones. Holy cow. All right, so KMB, Kimberly Clark, KMB. Ooh, nice. Take a look at that. The top, the bottom. Where was it? Where is it? Look at this. Down, up, down, up. Gotta love that right there. Look at this gap right there. Ooh, that's going to fill eventually. We don't know when, but eventually it will. Okay, the 100, 100, 100, 130. Okay, 1.3. I can do 1.3. Works for me. Last 30 days. Yep, that looks pretty damn good. The 100, there it is. One contract, there we go. Here's Johnny. By one covered call, KMB. 20 March, that's this coming Friday. The $100 call option, $121 is the profit. $9,800 is the investment. Now, I know a lot of you people say, I'm going to put up $9,800 to collect 121. Yeah. Think about it this way. We are creating what is called a weekly cash producing asset. Weekly cash producing asset. You're putting up money, $9,800. That's to show your commitment. That's to show that you're serious about what you're doing. What are you getting for it? Well, this week you're getting $121. Big deal. Let's pull up the calculator. Okay? $121 off of a $9,879 investment. That's crappy. That's 1.2%. Okay. Let's do it every single week for the whole year. Think about it. Every single week for the whole year. Let's multiply this by 52 because we all know there's 52 weeks in the year. Now, at 1.2% every single week, that comes to 63% by the end of the year. How much time does it take me? It takes me less than 10 minutes. Does it have anything to do with the Greeks? No, nothing to do with the Greeks whatsoever. Nothing to do with a lot of stuff. Doesn't have anything to do with the Fibonacci, has nothing to do with the MACD, has nothing to do with the retracement lines, has got nothing to do with the RSI index, it's got nothing to do with anything other than the fact that the current stock price is $100.26. And then I'm going to turn around and sell it to someone else for almost the exact same price I paid for it. So I'm not making any money off of the stock itself. My money comes from the premium that I sell against it. Strong vision. I am lost on choosing the call ask price for any stock up, down. Can you explain? Sure, why not? You're lost choosing the call strike price. Now, I'm going to show you something and you're going to feel so silly. You really are. Because it's actually a silly thing for you to say. Okay? So, you say you're having a difficult time choosing the call strike price. Okay? Strong vision. The stock is at $100. Let's do this. Okay? The stock price, $100.26. That's the current stock price, right there. Right there. The current stock price, $100.26. You're having a tough time choosing the strike price. 97, 98, 99, 100. Stock price, 100. Strike price, 100. How can you have a difficult time with that? It's a serious question. How could you have a difficult time stock price 126, strike price 100? What is it selling for? It's selling for $1.30. $1.30 is more than 1% of 100. 100 is the stock price. The strike price 100, the premium 130. It's more than 1%. How can you get stuck with that? Passport Eric, Dollar Tree is on its way back up. No dividends, but has weeklies. Made good premium a few times. Yeah, I did Dollar Tree a few times. And if I do Dollar Tree again, I just know someone's going to give me a hard time about doing a stock without dividends. We know who we're talking about, don't we? All right. So, Strong Vision, did that make sense? It either does or it doesn't. Okay? If I'm buying the stock for 100, I'm going to sell it for 100, and I'm going to collect whatever premium I'm going to sell on it over 1%. Bit2 wants to take a look at Riot. Let's try that one more time. But this time, let's put it in the right place. R-I-O-T. Ah, you got it? All right, I'm glad you understand it. It's really not that difficult. See, Vision, it was created for a 9-year-old, my 9-year-old daughter. What tax do you pay on gains? Now, Tom wants to know what I pay in taxes. Now, Tom, it reminds me of a gentleman who goes into a Rolls-Royce dealer, okay? Do you go into a Rolls-Royce dealer and ask them what is the gas mileage on that vehicle? How about a Corvette? Hey, what's the gas mileage on this Corvette? Lamborghini. Ooh, what kind of gas mileage does Lamborghini get? If you have to ask that question, you're not ready to play this game. You're welcome there, Vision. Okay, so, Tom says, the reason I say that, okay, setting up your account the proper way in the first place will allow you to eliminate or decrease. Yes, Lily, I used to have a Corvette myself. I loved my Corvette. It was a nice car. The kids never wanted to drive in it. I had to drive it by myself. Nobody wanted to go for a ride with me in my Corvette. Tom, thank you. All right, so anyway, Tom, here's the thing. When you're setting up your account, number one thing you do not want to do, have the account in your own name. Number one thing, never put it in your own name. If it's in your own name, congratulations, you just volunteered to pay the absolute highest taxes there are. There's absolutely nothing wrong whatsoever opening up an LLC, a limited liability corporation, a subchapter S corporation, a C corporation, or even a family foundation in a state where there are no taxes. Delaware, Wyoming, I think North Dakota, Vegas, which is Nevada. Open up a business in a state where there are no taxes. There's a bunch of them. You have your account, your trading account there. If you do it on Montana, anonymous, nobody knows who owns it. Okay? Now, you might have a problem if you ever get into discovery, if you ever get sued and you have to go to court and they ask you through discovery. And if you say you don't, when you do, you can get in trouble for that. But nobody can go in and take a look and see who owns it. But during discovery, you do have to say it. But not the point. The point is, if you're worrying about taxes, you need to chat with a tax planner or a tax strategist to pay the least amount of taxes legally possible if that's the route you want to take. If you like paying taxes. Some people actually are okay with paying taxes. I had a friend of mine, he said, you know what, I had to pay $250,000 in taxes this year. I'm okay with that. I made enough. Good for you. I say hell no. Even if I made $50, I don't want to give them anything. Okay, shopperlative. TXRH, Texas Roadhouse. We looked at this one last night. Not top of my list, but somebody brought it up. TXRH, Texas Roadhouse. Okay, here you go. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up. We went up a little bit today. That's what he just said. So let's check it out. It's not on the watch list, but it was one of those what we took a look at yesterday. Someone brought it up. There it is. Dropped. Here's the bottom. Okay, you've heard it over and over and over and over again. Buy low, sell high. Here's the high. Here's the low. Last week. You can't get any low than the low of right there. Okay, now she's going up. It's at 171.23. I have no idea where you jumped in. Strong Vision, you like that one? Thanks. All right. Shop Prolative, thank you for that. Dollar Tree. Let's take a look at Dollar Tree. DLTR, is that right? DLTR. There it is, Dollar Tree. Ooh, like that one. The top, the bottom. Where was it? Where is it? Up, down, up. Okay, let's zoom into that right there. How does that look? Here's your last 30 days. Shoots up, 30-day high, 30-day bottom. Now she's turning around. If you're looking for opportunity, it's really not that difficult. Your 30-day high drops to a 30-day bottom. Now she's turning around, going back up again. Now, not for me though. Okay, now the only reason I say not for me is because I look at the 30-day top, I look for a 30-day bottom. There it is right there. But me, I got certain rules. 2 days to the upside, today's only one. Tomorrow might be number 2. And then Wednesday would be number 3. That's where I would jump in, which would be probably here. Here's your top, way up here. Here's your bottom, way down there. Look at all that empty real estate. Okay, now, it could be going up. That's what it looks like. Now, just because it looks that way, that's not guaranteed. There's only 3 guarantees in life. And you guys know what 2 of them are. Okay. All right, so let's take a look at Dollar Tree. Let's take a gander. It's currently at 114.98, so we're going to do the 115s because that just makes sense. Okay, the 115, there it is. One contract. Here we go. And here's Johnny. One covered call, Dollar Tree. 20 March, that's this coming Friday. The 115 call option. The current price is 114.98. I mean, come on. How much closer can you get to 115? 114.98. If I buy it at 114.98, sell it for 115, I'm bringing in 277. It's costing me 11,000. All right, well, what's the rate of return? Hey, Social Lily, what kind of Corvette? What year Corvette you got? I'm curious. And is it red? I had a white 84. I love that car. Oh, this is it. This is number 5. This is the last one of the evening. Number 5, right here. Here we go. There it is. Dollar Tree, 20 March, 115 call option. 277, 11,000. Let's get out the calculator and see what it is. Calculator. 277. We're going to divide it by the investment, $11,223 and a bunch of pennies for a 2.4. Ooh, you got a C6 blue? Nice. Oh, Cam got a blue one. Social Lily, you got a white one. Okay. Okay, better than expected. Yep. Thank you, Social Lily, Shaprolative, thank you. Eric, thank you. All right. C4, gotta love it. J Fly, how you doing? Nice to meet you, Miss J Fly. Ooh, became a fan. Love it. Uh-oh, your mom has a red 73 Stingray. Wow, nice. All right, so here we go. Let's get rid of this. Did we find out what the rate of return here was? Oh, 2.4. 2.4. Woohoo! That's it for the day. That's our 5. We got, ooh, wow, we got 25 minutes left to go. We got 25 minutes. What questions do we have? Alrighty, alrighty. Okay, what do we have? Kev, when is the last day you should do a covered call for a weekly? There isn't one, Kevin. Okay, so if I look at one and the numbers don't look good for this week, I will take a look at what it looks like for next week. However, Kev, I do want to make sure that whether I do options for this week or do options for next week or do options for the week after that, however I place it, however I stretch them out, I want to have 1% coming in every single week. So if I have a $100,000 account, I want $1,000 coming in every week. It doesn't matter if they're going out for this week or the week after or the week after. Cotton, you got a bad one in today's 5 VFC dividends are inconsistent. Thank you, Cotton. I'm well aware of that. Travis, if my account isn't set up for buying calls, can you still buy in and sell at 1% gain that week? Travis, that's a little confusing. I don't buy options, I only sell options. Okay, so you're asking me about buying call options. As the days tick away, the value of the option slowly decreases based on the time value of itself. So you have to make sure that the stock price increases. So you got your work cut out for you, because you have to balance between, is the stock continually going up? Because as the days go by, if the stock doesn't move at all, the option price will still go down. The stock can stay perfectly flat all week, and the option, if you buy it, will still go down. Called time decay. Thank you, Cotton. Already did that one. When is the last day? Okay, so Kev is not really a good time or a bad time, because I will look at stocks for this week, because today's only tomorrow's going to be Tuesday, so I got 4 days to see if I get 1%. And then on Wednesday, it's a balance, because sometimes on Wednesday I can get 1% for 3 days. But then most of the time on a Wednesday, I got to push it out until next week. Larry Brown, back again. I remember you were here a while ago, Larry Brown. Thanks for coming back. Okay, so we got something down here. Pedro James, would you invert side YouTube, please? Invert? You mean change my camera so it turns around? You mean kind of like this? Hold on a second, Pedro. Here you go. You ready? There you go. That's what that looks like. Now, Pedro, what you're asking me is something that doesn't exist, as far as I know. And if you know there's a way, I'll be more than glad to do it. But the selfie camera on an iPhone, in conjunction with YouTube, there's no way to invert it to make everything look normal. Unless, of course, I go through a computer that inverts it for me. But I don't, because I got 8 different iPhones here. And I'm broadcasting on 7 of them. One of them doesn't work because the sound's not right. Kev, so you are willing to hold it a couple of weeks as long as the chart is good and what's average? All right, Kev, what I'm looking for. Let's get rid of this. Let's get rid of this. Let's get rid of that. Let's go back to this, and let's go back to here. Okay, Kev, what I'm looking for, Kevin, okay, Here we have the high, and here we have the low. This is like a perfect setup for me. Okay, top, she drops, you get your profit taking. Great. Now we're here, we're turning around, going back up. So the 114s are paying 201, which is a little bit less than 2%. Okay, here's the thing. If I buy it at this price, sell it at this price, collect that, great. Now, if I don't sell the stock this coming Friday and I take it into next week, what I want to find out next week, is it worth it for me to hold on to it for long? Because it's always going to be a balance between the two, Kev. Okay? Number one, what did I buy it for? Number two, what option did I sell against it? Number three, where is the stock right now? Number four, where does it look like it's going next? The chart tells you, gives you an idea. It doesn't tell you, say, hey, we're going up, hey, we're going, no. It just gives you an idea, okay? Top, bottom, now she's bouncing. So it looks as if it's going up, okay? What did I buy? What did I sell? Where is it at? Where does it look like it's going? And what should I do next? That last one, Kev, what should I do next? That is something you cannot answer with the information we possess today. So, like John F. Kennedy once said, we cannot answer the questions of tomorrow with the information we possess today. Which means, if I buy this tomorrow morning at 114 and I sell this and I collect my 1 or 2%, great, wonderful. Well, what am I going to do on Friday? I won't know what I'm going to do on Friday until Friday comes. That's basically it. Don't know what to do until the situation is in front of me. Okay. Danielle. Is it Danielle or Daniel? What's up, everyone? Happy Monday. Happy Monday. Is it good to buy cover stock in the money? Pedro, it's always going to depend on which stock you're talking about. Okay, because they're all different and all the numbers are the same. C-Man, I see you. Oh, he came, he left. John Ward, teaching at J&J, trading at high. Okay, let's take a look. Now, if you're totally honest with you, Mr. Ward, I very rarely ever buy Johnson & Johnson. There's the top, pulled back, now she's back up again. 243 to 242.50, not even making 1%. Johnson & Johnson is one of those companies that's been around for over 100 years. They're so big, they could really care less what we think or what we do. Some companies pay 1% or more. Johnson & Johnson, very rarely. Now, don't get me wrong, it's a good company. And you get a good, you get a good premium. But the 243s, well, the 242.50s are paying 250. Okay? You barely make your 1% on that thing. Oh, wow. I answered almost all the questions. Okay. Okay, I can't even read that one. Hello, by any chance, will I be able to use the Black-Scholes model to price the following? I'm new here. It's Takunda. Okay, Takunda, you're familiar with the Black-Scholes pricing method? Good luck with that one. I don't even bother with it. Now, I have to applaud you. If you understand it, freaking awesome. Seriously, I bow in your presence if you understand the Black-Scholes pricing method. And for those of you who don't know what it is, let's look at it. You ready? Let's go to Google. And in Google, we're going to put up Black-Scholes equation. Let's go back one. Images. There we go. Okay, sit tight for a second. All right, I'm going to blow it up really big so you can see it. There it is. Now, does anybody besides Takunda understand that? Okay? That is how they figure out the prices for the stock options. It's called the Black-Scholes pricing methodology for standardized options. It's a mathematical equation, and it's calculated every 10th of a second. Supercomputers calculate every 10th of a second to figure out how do they come up with the numbers. Well, there it is right there. That's the equation. Have fun with that one. Next. Let's go back to where we were. These are naked covered calls. Absolutely not, Kev. Okay? Okay, one thing I don't do is I don't encourage people to do silly things. And a naked covered call is not a good thing. So, what other questions do we have? Okay, Daniel wants to take a look at Macy's. Now, I'm hoping Macy's keeps on dropping. Yes, because I am short on Macy's. Here we go. You ready? Let's take a look at these numbers. The high, the low, where was it? Where is it? Look at this. Down, up, down. That's it. Down, up, down. That's it. Here we go. Uh-oh, drop, 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 drop. Look at what happened right here. Let's zoom in a little bit closer so you get a better idea of what it looks like. The bottom right there, Friday. Drop, drop, drop. Bottom was Friday. Today's one day up. Black something something. It's called Black-Scholes pricing methodology for standardized options. Don't try to figure it out. It's nothing but confusing. Any supercomputer stocks are considering. None. Sorry, Stephen. If it's not been around for at least 2 decades, have 2 decades of consistent profit, it's a no. Hal Wilson. Ford. Okay, thank you. Oh, Steve Peterson, real estate. How would you like to get a guaranteed 20% per year, Mr. Stephen Patterson, real estate? Hal Wilson, Ford. Let's take a look at Ford. Ooh, Ford is one of those companies. Don't get me wrong, I love Ford, I do. Here's the top. She's dropping like a rock. I'm waiting for the bottom to show up. That's it. Just waiting for the bottom. Drop, 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 drop. Here's a new bottom. Looks like it's slowing down, though. Look at it. The dropping is slowing down. So meaning the bottom is coming up soon. Kev, so you purchased 100 shares of stock first, then do the covered call for one contract, to be clear. Absolutely. Running gold. Yeah, Steven, if you're interested, DM me. I got something to share with you. Running gold, want to take a look at the gap. The gap. Interesting. Now, we talked about this one last night. Here's the top, here's the bottom. Look at the motion. Down, up, down, up, down, up. 23.34. The 23.50s are going for 38. That, again, is over 1% if you like the gap. You either like the company or you don't. The rules are very simple. Number one, never buy anything you do not want to hold on to long term. That's it. It's one of the simplest, easiest rules either. Never buy something unless you want to hold on to it for the rest of your life. If it hits your target, sell it. But go into it with the intention of holding on to it. There's a big difference between intention and opportunity. See, I intend to buy the gap and hold it for the rest of my life. But if someone walks up to me and says, hey, you bought it at 23.34. I'll buy it from you at 23.50. Profit is profit no matter how big, no matter how small. And here's something you may or may not know. It's not a profit until you take it. Same with the loss. It's not a loss until you agree to take a loss. John Ward. Observation, learning, very intriguing. Thank you there, Mr. John Ward. Pedro, where can I buy a t-shirt like that? DM me, brother. I got, I think 10 of them in my closet, and I just ordered a bunch more. Also, you can go on the website and order one from the website. TMU wall divots. TMU, what is that? TMU. T-Mobile. No. TMUS is T-Mobile. Okay, here we go. It doesn't really look that good. Okay, kind of going sideways. No real rhyme or reason. That formula definitely hurt my brain. It sure does. For example, meticulously gifted. Like that name. That's a cool name. But can you explain, for example, especially when you use the F-O-R-E? Randy Harvard, are you putting up the stock you own as an investment in the option? I'm not quite sure that makes sense. Let me see if I can walk through it a little slower for you. Okay. I'm going to explain, Randy, I'm going to explain to you very slowly what I'm doing, because what you're asking, it may make sense in a different strategy that I'm not doing. So let me explain to you what I am doing, Randy, because you're relatively new here. The only reason I say that is I'm really good with names, and Randy Harvard 6084, and I've never seen that before tonight. So, if I buy a company, okay, number one, I want to make sure that it's a safe, predictable, and profitable company that has weekly options available. That allows me to get a weekly cash flow using the strategy that I created for my 9-year-old daughter back in 2008. She said, Daddy, can you teach me? All right, great. So it's got to be simple. So number one, I only want to do good quality companies. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. Ryan Gold, sit tight for a second. Okay, so those 5 lists I just gave you represent about 300, 350 different companies that are consistently profitable year after year after year after year. Great. Now, those are the only ones I want to take a look at. So, I want to buy one of those companies because they increase their profits year after year after year. Now, that's my intention. Yes, I'm aware Buffett's retired. I'm well aware of that. Okay, but we all know who he is, and we all know that he picked those stocks that are in that company. So, my investment strategy is to pick and only stay with the winners. Those are companies that are consistently profitable. Okay, game and sound, we'll take a look at that in a minute. Hold tight. I buy it for whatever the price is. Let's take a look at AT&T, just for example. Okay, there's AT&T. Very first thing I want to look at is the chart. The chart tells me where the stock is moving, because we buyers and we sellers, we buy, we sell, and that creates that mess. All right, so as you can look, the last couple of weeks, the stock has come down, now it's going up. That gives me a single, yes, I like AT&T, and 30-day high, 30-day bottom, now she's going up. Great, now I have an idea that the stock is going to move. So I'm only looking for a 5-day play. I want to jump in on a Monday or a Tuesday and be out on a Friday, ideally. So I want to buy it at the current price, which at this moment in time is $27.73. Okay. Now, if I'm buying it at 27.73, I want to sell it for the safest and most productive strategy that is simple, safe, and predictable. Great. That's going to be the 27.50. It's the closest one. No, I could do the 28, but then the stock has to move up. Then I'm looking for the, dancing monkey. Yeah, no, thank you. So at 27.50, it's a higher probability that it will get called away and taken away from me, and then I get to keep that money. Okay? I get to keep this money, and I get all my money back. So it's a profit. And the profit that I'm looking for, Randy, is only 1% every week. Now, it takes me 5 to 10 minutes a day. That's it, 5 to 10 minutes. It's less than an hour a week. So think about it this way, Randy. If, at my age, let's say I have $200,000 in my trading account, 1% of 200,000 is $2,000. If I trade 5 to 10 minutes every single day, that's 1 hour a week. 1 hour a week for a $2,000 profit. My time is now valued at $2,000 an hour. So I don't want to own anything long term. If I had to, I will. But it's not my intention. My intention is to roll these things like a revolving door. Okay? Jump in at 27.73, sell at 27.50, walk away with 1% profit, jump into the next one, whatever that is. I only want to do companies that are consistently profitable because it just makes sense to me. Strategy that I created for my 9-year-old daughter works out better than anything I've ever done when you balance time invested opposed to rate of return. So 1 hour a week for a 50% rate of return, I think that's a pretty good trade-off. But that's where I'm coming from. If there's other ways of doing it, fine, great, wonderful. There are hundreds of ways of investing, okay? But I don't want to do those things. I want simple, safe, predictable, consistent 1% per week. It's simple, it's easy, it's less than 10 minutes a day. That's it. That's all I got for you. Hopefully it made sense, Randy. Okay, I'm basically out of things. Pro 2241, your thoughts on Altria. We did Altria earlier today. Actually, I think it was the first or second stock we did this afternoon. And believe it or not, thank you, Randy. Believe it or not, this is live on YouTube, which means it's being recorded at the moment. At this moment in time, for those you who don't know, it is 10:56 p.m. on the 16th day of March 2026. So no, this is actually live. Hal Wilson, I know you want at least 1% each week. How does that make it shake out percentage-wise annually? Do you have an idea? Wilson, you know there's 52 weeks in a year. If I'm getting 1% every week, that's over 50% for the year. That's it. Okay, Game Sound, Hormel, HRL. No, it's dropping. Look at that. But if you like it, now don't get me wrong, okay? Oh, wait a minute. It stopped on Friday. Friday was the bottom. So today is the first day to the upside for Hormel, if you like it. I'm going to write Hormel down. Jamel Warren, Marvel, MRVL. Interesting. Ooh, take a look at that. High, low. She went up, down. Now she's going back up again. If you like that, if you like Marvel. Steve, I might have missed it, but did we look at Johnson & Johnson? We looked at Johnson & Johnson. We have not looked at 3M. As a matter of fact, I did buy some 3M today. I did. Okay. Drop. Now she's going right there. 149.95 to 150 is going for 242. That's over 1.5%. If you like it. Uh-oh. John Bahay. PHM. Pulte Group. PHM. All right. PHM. Here's the high. Here's the low. And that's bouncing up also. Nice pick. All right. It is 11 o'clock. I am done. You guys have a great day, and we're going to do this all over again tomorrow because the sun will come out tomorrow. Wipe away the cobwebs. Yeah.
And dive into the deep.
Fixing the world while the rest of us sleep.
Your heart's set on giving, no matter the strain. Building your legacy through love and brain. Julie knows that fire
100%.
in your
Either way.
soul,
100%.
the kind that lifts
The broken